So yesterday we talked about Apple's earnings. Today we're going to be talking about Facebook.
This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com.
Hey there, 10-minute traders, and welcome back to the How to Trade Stocks and Options podcast, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. I'm your host, Christopher Uhl, voted one of the top 100 people in finance for 2019. And today we're going to be focusing on Facebook earnings. Now, Facebook, actually, I was looking at my phone this morning and I saw that the NASDAQ was up again after a huge rally yesterday with Apple and the Fed. The Fed essentially saying that they are going to be holding rates steady and that they will continue easy monetary policies, which the stock market likes. So the stock market after that kind of exploded upward. And then Apple earnings yesterday exceeded expectations on price, even though the top and bottom line results were both below expectations. So you never can tell how the earnings report will impact the stock price. So anyway, so today we're talking about Facebook. Now Facebook, I was looking at my phone. This is where I was going with that. I was looking at my phone this morning. I saw that the NASDAQ was up again, and I was like, that's strange. Why is it up again? And then I saw that Facebook had their earnings, and they have well exceeded their expectations for earnings. Now, Facebook's earnings are pretty interesting. Just a couple of quarters ago, Facebook dropped like 25% after earnings. It was a huge, massive cliff that they jumped off of. Today, they're trying to do the opposite. It is up $17 in pre-market trading from the prior close of $150. It's currently trading at $167, which is an 11% move up. That's really strong. And that's actually what I wanted to show you today, was how you can calculate your own expected move on any stock in any time frame to get an idea of what could be priced into things. So the first thing that we do is we go into the Facebook options chain. And we'd have to go to the strike from yesterday where it closed, which was 150. And you have to go to the options expiration cycle that will have the earnings in it, right? So what we're looking at is the February 1st options expiration cycle. So we go to the 150 strike. And to find the expected move, we take the at-the-money straddle price. So the straddle is selling a call and selling a put at the money, right? So we click sell for both the at the money call and at the money put, and that gives us roughly $5.50. Let's call it that. $5.50 on both sides. So combined, we're looking at $11. So our expected move was $11, but it's even less than that. So we take 85% of that. So let me get the calculator out here. And 85% of $11 times point. Okay, so I just pulled up my iPad to do a calculator because the iPad doesn't have a calculator app built in, and I had to watch an ad to use the calculator. My apologies. So 11 times 0.85 equals $9.35. So our expected move was $9.35. Do you remember what I just said that the Facebook earnings are showing? A $17 move? Yeah, giant move. Well outside the expected range. Now, you could have bought the 150 call if you were very confident that Facebook would go up and you'd be making a killing today. Or maybe you could have bought the 150 put expecting Facebook to be going down, and your trade's going to end up being worth zero. Unfortunately, that's the way the options work. It's either right or it's wrong. There's not much gray space there. So we had a $9.35 expected move. We see a $17 move. That's the kind of things that you've got to watch out for when you trade earnings. Now, I used to trade earnings, and I don't anymore because of situations like this. You can get really confident and say, oh, I know exactly what's going to happen. The option prices have built in a move of $9.35, and that makes perfect sense to me. I will absolutely put on an iron condor, maybe an iron butterfly, or something centered around a neutral strategy play, waiting for the IV to crush to happen. But then when you've got a move that's nearly double what the expected move is, that's really hard to work with. And so that's why I don't really trade earnings. And in this case, if you had bought I mean, it's going to be opening up at 167. If you had bought the 167.5 call yesterday, it would have been a 30-cent play. That's going to pay off pretty big this morning. So either way, I just want to talk to you about Facebook earnings and show you how you calculate the expected move. Certainly not an endorsement to trade earnings unless you enjoy that game. I mean, it's one of those binary events where it could be all or nothing within the span of 24 hours. So listen, thank you so much for coming and learning more about Facebook's earnings today, how to calculate the expected move, and you can apply this really to any stock at any time. And that's actually what I want to mention as well. You can take this and you can say for over the next 60 days, maybe you want to go out and see what Google is going to look like 60 days from now. You go out to the option strike that's going to expire around 60 days, sell the at-the-money straddle, take 85% of that. Well, don't actually sell it, but price what the at-the-money straddle would cost if you're selling it. Take 85% of that. Hey, you've got your expected move for Google for the next 60 days. Is it right 100% of the time? Facebook has proven that is not the case. But that is the expected move, and things do happen. The expected move is basically the best guess set by the options market makers there as historical events, and price moves recently are all built into that, and other earnings events as well. But as with Facebook having a 25% down move a couple quarters ago, and now we're looking at a 11% up move this quarter. Yeah, it may be time for the option market makers to price their at-the-money straddles just a little bit higher for the next earnings event. So hey, listen, thank you so much for coming to today's How to Trade Stocks and Options podcast. Be sure to come back tomorrow for more tools, tips, and tricks to help you trade faster and trade smarter. I'll see you on the next episode. Thank you so much for listening to today's How to Trade Stocks and Options podcast. I know you're a listener, but are you a watcher? Make sure you head on over to YouTube, type in 10-Minute Stock Trader, and subscribe to the 10MinuteStockTrader.com YouTube channel. Every week I upload all the podcasts as full videos, and that way you're getting the full 10-minute trading experience. That way you can have all the tools, tips, and tricks to help you trade faster and trade smarter. Make sure you subscribe to whatever podcast app you're listening to, and leave me a 5-star review if you don't mind. That would be fantastic. And whenever you're done with that, head on over to 10MinuteStockTrader.com and download the 1-minute options trading quick start guide. It'll give you all the tools, tips, and tricks that I use in my own portfolio, and it never gets outdated, and it will apply to every single options trade out there. So I think it'll be pretty useful for you. And while you're there, check out the free portfolio page. That'll show you everything that I've traded over the last year in full transparency. And since you're on the website already, check out the free trading course. In this free trading course, I give you every single thing that I know and use in my own portfolio, and I definitely think it'll help you out too. And then after you're done there, head on over to tastyworks.com and sign up using the code 10MINUTE, that's 10MINUTE, and I'll send you over $150 in free 10-Minute Trader exclusive bonuses from 10MinuteStockTrader.com. And most of all, thank you so much for letting me be a part of your day. I really appreciate the fact that you and I have connected today and that you've chosen to put me inside your earbuds. That means the absolute world to me. And thank you so much for stopping by. 10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice, tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.